how did our Indian markets actually prep, given that the cues that we have from the global market? We have a research team joining in with us to tell us how we should be setting up for the trade. Vivek, first up, let's come to you and see what the trade setup is looking like for the Indian markets today.
Well, good morning. Absolutely nothing to complain about. Yesterday we closed about 26,000. Today, we are looking at the Asian markets as well as the GIFT Nifty indicating a positive start. Let's have a look at quickly how overnight cues panned out. Overnight cues largely mixed. US market snapped a 4-day winning streak. Oil prices yesterday very supportive. They cracked almost 2%. And when you're talking about Brent futures, yesterday closed near the $73.50 a barrel mark. Now, talking about the Indian markets, like we mentioned, it was actually a very choppy and lackluster session until the last hour when you actually saw quite a bit of buying emerge, and that helped the Nifty close above the 26,000 mark. Mid-cap index snapped a 3-day gaining streak, but Nifty Bank managed to hold on to the 24,000 mark. Mid-cap index and the small-cap index relative underperformance actually ensured that the market breadth was in favor of the declines. What did very well yesterday? It was power as well as power ancillary stocks that did quite well. This on the back of the National Electricity Plan, the 10-year plan that was being approved by the Ministry of Power. But on the other hand, another power exchange stock actually continued to see weakness for the second day in a row as the overhang of market coupling refuses to go away. Today, quite a few cues, but most importantly, we'll be waiting to watch out for whether the gap up start that we are anticipating sustains or whether we do see selling emerge at the higher levels.
Thanks so much for that, Vivek. That's how we should be watching out in terms of a setup for the market. But which are the important stocks that we are keeping on our radar today? Vamakshi is joining in with us. Vamakshi, good morning.
Well, good morning, Vinny. Let me first start off with IDFC. This counter will be in focus because the NCLT has approved the merger of IDFC Financial Holdings with IDFC Limited, leading to the merger of this combined entity into IDFC First Bank. So watch out for all of these counters. Vedanta will be considering the fourth interim dividend for FY25 on October 8th. PP Fintech will also be on our radar, and that is because sources suggest that PP Fintech may explore plans to enter the healthcare space and start its own chain of hospitals. Now, the company has clarified. They say that the company continues to explore options but have no decisions to update at the moment, so watch out for that one as well. Zen Technologies has launched a remote-controlled weapon and surveillance systems to strengthen India's defense capabilities, and ONGC is also on our radar because the board has approved the Government of India's decision to infuse an additional 10,501 crores in ONGC Petro Additions Limited. Five-Star Finance again in focus on the back of a source-based news. PE investors are looking to offload nearly 19.22% stake in the company, so it's a huge chunk that they're looking to offload at a floor price of 768 rupees per share, putting the deal size at almost 4,324 crores. ASK Automotive also on our radar because Kuldeep Singh Rathi, who is one of the promoters of the company, is looking to sell 6.05% stake via OFS on September 27th, that is today, that is on Friday as well as on Saturday. Floor price is at 433 rupees per share. The base of OFS size is at 5.5% of equity for pegging in at 469 crores. They also have a green shoe size of almost 0.55% of equity. And lastly, let's watch out for KPR Mill. The promoter KP Ramaswamy sold 3.1% equity or 971.4 crores worth of shares, while on the other hand, SBI MF was a major buyer of this chunk.
Thanks so much for that, Vamakshi. But let's move on and talk about what's going to happen in the world of F&O. Nigel is joining in with us this morning. Nigel?
Well, good morning, Vinny. Yesterday's trading session, we had a late surge, actually. The Nifty Bank came to the party, and that's what helped the Nifty recover sharply from the low point of the day. It was a technical factor as well that did play out for the Nifty Bank, because yesterday you had the options weekly expiry, and also you had the monthly expiry that played out for the Nifty Bank. And I was looking at the data points, and it appears the rolls are on a lower side if you compare it to this series with the previous series, and the total open interest as well on the Nifty Bank is relatively lower. So that's the reason, in fact, we did bounce up. The Nifty Bank came to the party. How were the FIs placed? Well, yesterday there was obviously some unwinding since the rolls were not too high on the Nifty Bank. The long-short ratio comes up for you with the longs at around 75%, while the shorts are at around 25% or thereabouts. And as we've been making this point over the last few sessions, that the clients and the FIs, well, they're on opposite ends of the spectrum. Clients, net short with close to 2.5 lakh contracts on the short side, while the FIs, they're net long with more than 3 lakh contracts on the long side. The India VIX, well, it perked up a little bit, but in the last couple of trading sessions, it's cooled off yet again. And that's normally a bullish sign. So that's good news, right? The India VIX cooled off by close to around 7% in yesterday's trade. Now, today you have the Nifty that plays out its weekly and monthly expiry. It's the contract that expires today, the September contract. And the sense you get is there is some signs of writing. The 26,050 call, well, that's been seeing some writing. The 26,100 call as well has been seeing some build up over the last few sessions. But on the downside as well, there appears there is some support at around this, 25,800 level, because the 25,900 put has seen a fair bit of open interest build up. So that's the broad range today, that comes up for you on the screen. We need to get past the 26,100 level for the bulls to feel good and the shorts to get squeezed out on the wrong side. So let's see how that goes. The Nifty Bank, that's been the flag bearer for the bulls. That's been the one that's been recovering from the low point of the day. And the recent high, you'll want to get past that and trade above that level. So that's the 54,250 odd mark. Let's see whether or not we can get past that. Reference point on the downside is 53,700 going by the options data and going by yesterday's low. Back to you.
Thank you so much for that, Nigel. But let's move on.